In my time today, I'd like to discuss the economic situation and the forecast for the Pan-European region. This is a region basically we break down into four sub-regions. First, the EU 15, the old members of the European Union. Second group are the new member states. Third group are the non-European members in Southeast Europe, and the fourth group are the CIS economies. Now, in all four of these subregions, there was a significant economic downturn in 2012 and 2013, but we're predicting an upturn, significant uptick really, in 2014 and a further uptick in 2015. More specifically, with world growth forecast to be 3%, we're forecasting 1.4% in the EU 15, 2.1% in the new member states, 2.6% in Southeast Europe, and 3.4% in the CIS economies. Now, these forecast numbers, although an improvement over the current year or the past year, are still only one-half the level that they were prior to the financial crisis. The CIS continues to be the fastest growing of the four regions, as it was prior to the crisis, even though it suffered the largest economic downturn in 2009. The CIS is the only one of the four groups that continues to grow faster than the world economy as a whole. The new member states in Southeast Europe had been growing faster than the world economy prior to the crisis, but that has not been the case since the crisis, nor for the forecast period. The European Union 15 continues to be one of the worst performing regions in the world in terms of economic growth. Many of the EU 15 basically had negative growth in 2012 and have slowly started to come out of that in 2013, even though growth is still negative in 2013. But for 2014, we're predicting growth in all of these economies except for Greece, that will continue to have another year of negative growth. Inflation has continued to decline significantly in the Eurozone, and over the last half of the year has now declined below the 2% target, and over the last few months has been below 1%. We're forecasting that inflation will stay below the 2% target over the next 2 years. And a possible downside risk would be that inflation would stay too low or be below 1%, in which case it could become problematic. Another key development in terms of inflation is the fact that a major aspect of the Eurozone crisis has been the lack of competitiveness of the periphery versus the center. In order to regain competitiveness, it requires price increases in the periphery to be slower or smaller than in the core. And that has indeed been happening. The inflation rates in the periphery have been lower than in Germany in the core economies, and therefore they have regained some competitiveness, but that process has only begun, and much more adjustment will be required. Unemployment remains historically high in the EU 15, and for the Eurozone as a whole, it's over 12% now. We expect that we think that has probably peaked, but we expect that the decline is going to be quite slow, and even in 2015, we still think the unemployment rate in the Eurozone will be 11.8%. So very little decline in unemployment over the next 2 years in the Eurozone. The very high levels of unemployment, above 25% in Spain and Greece, of course, are really depression-level rates of unemployment. Now, one of the key causes of the Eurozone crisis was that prior to the financial crisis, this region had depended on large capital inflows into the region. Due to the crisis, a number of issues about the solvency of the debt in the periphery arose, whether it be in terms of the government or the financial sector or the real estate sector. And the problems that have existed over the last few years has been due to the needed adjustment that has had to occur to that decline in capital inflows. Now, much less appreciated is the fact that the new member states and the economies in transition have had to go through a similar type of adjustment. The capital inflows into the sum of the new member states and the economies in transition is only 1/3 over the last few years of what it was prior to the financial crisis. The economies in transition and so forth have been able basically to adjust to that through changes in reserve accumulation and capital outflows as opposed to a change in the current account balance, which is much more difficult. And as Alfredo mentioned, one of the key down risks going ahead is that there will be capital reversals in the coming year from the developing world. The degree to which that capital reversal will have negative effects on these economies will depend whether or not the adjustment in them has to occur through the current account balance, as it did for the European periphery, or if it can occur in the other components, the reserve accumulation or capital outflows, as it did for the new member states and the economies in transition.